Hello, everyone, and welcome. Thank you for joining us for today's webinar, the deep dive into the research and development credit. My name is Kristen Biermeyer. I'm the Director of Marketing at Wagner CPAs, and I am thrilled to have you all here with us. Before we get started, just to cover a couple of quick housekeeping items. First, please note that the webinar is being recorded, and a link to the recording, along with the slide deck, will be sent to you after the event. If you have any questions during the presentation, feel free to use the Q&A feature at the bottom of your screen. We won't have time to answer questions during the presentation today, but Sarah will be following up via email to address as many of your questions as possible. Her email address will also be included in the slide deck that you'll be receiving with the recording. If you encounter any technical issues today, reach out via the chat and I'll assist you as best I can. Today, we're joined by Sarah Brown, a manager at Wagner CPAs. Sarah has extensive experience helping clients navigate tax credits, including the R&D credit, and we're excited to have her share her expertise with us today. So without further ado, please join me in welcoming Sarah Brown. Sarah, the floor is yours.
Awesome. Thank you so much. I'm very excited to talk about the R&D credit. It's just been a lot of talk recently, and we have some new forms coming out, and with Section 174, it's always a hot topic. So here is a quick agenda of what we're going to all discuss today. So we'll really briefly get into the history of the R&D credit. We'll talk about what it means to qualify for the credit, documentations, calculating the credit, and then, like I mentioned, there is a proposed new form 6765, so we'll briefly touch on that. And then also briefly at the end, if we've got time, we'll talk about where is Section 174 sitting right now. All right, so let's jump in. We are going to start off just discussing the history. So the credit was originally introduced as part of the Economic Recovery Tax Act of 1981. The intention was to encourage investment in the United States. There were foreign governments that were starting to incentivize those foreign companies with certain credits and whatnot for researching. So American lawmakers in the late 70s, early 80s were thinking, hey, we got to get this in the United States. So that was enacted in 1981 with an original expiration date of 1985, which it's still here now. So we know things have changed since then. It's been expired 8 times, extended 15 times, and it was officially made permanent in 2015 under the PACT Act, and that's where it currently is sitting. It is officially known as the Credit for Increasing Research Activities. So we for short say the R&D credit. Throughout this webinar, I'll say the R&D credit, but the official name is Credit for Increasing Research Activities. It is a general business credit under Section 41 of the Internal Revenue Code, a dollar-for-dollar reduction to a company's tax liability that would be equal to a percentage of certain qualified expenses, which that's what we're going to get into today. First, before we do that, though, just a little terminology acronyms that will be used throughout the webinar. We'll be talking about QRAs, which stand for Qualified Research Activities, QREs, Qualified Research Expenses, R&D stands for Research and Development, R&E, Research Experimental. Code Section 41, as I just stated, is what houses the R&D credit, Credit for Increasing Research Activities, and all of the rules and qualifications are in the Code Section 41. And then Code Section 174, in Code Section 174, that defines what a research expense is, what an R&E expense is. All right. So let's dive in, qualifying for the credit. Very simple terms or simple format to look at. To qualify for the credit, it's any company engaged in activities to develop, design, improve products, processes, software, formulas, inventions, or techniques. So the 6 items that I listed off there at the end, again, products, processes, software, formulas, inventions, and techniques. That's what are defined in Code Section 41 as business components. So throughout the webinar, when we talk about business components, that's what we're talking about there. So again, any company who is developing and designing new or improved business components qualify for the credit. We will, of course, there's lots of qualifications, so we'll dive in here and further describe what qualifications to develop, design, and improve the business components there are. But again, just in an easy format to see. Also wanted to note here that there is no industry or business type that's excluded from this credit. So any business, any industry is allowed the credit. Of course, just with the nature of some industries, trade or business, what they're doing, they are naturally doing a lot of research and development. And so some of the common industries we will see that qualify for the credit is going to be the automobile industry, breweries, wineries, distilleries, or even just the food and beverage industry in general, fabrication, manufacturing. A lot can fall under the manufacturing, but the manufacturing industry very often can qualify for the credit based on the work they're doing. And then another big one is software development. That's not an all-inclusive list. Remember, no one's excluded, but those are some common industries we see. All right, so let's dive in. So getting more technical here, the definition of qualified research activities per the Form 6765, which is the tax form that we report the credit on. I'll read this verbatim here. This is again from the instructions. It says, the research activity must be undertaken for discovering information that is technological in nature, and its application must be intended for use in developing a new or improved business component of the taxpayer. In addition, substantially all of the activities of the research must be elements of a process of experimentation relating to a new or improved function, performance, reliability, or quality. So here's the formal definition of the qualified research activities that are allowed for the credit. You can see here I've underlined 4 key little segments. And this is what we call the 4-part test that we're going to dive into. And to qualify as a qualified research activity for the credit, you have to pass the 4-part test. So let's dive into that. First up, we have technical uncertainty. So the activity, the research activity, must be intended to discover information that would eliminate uncertainties concerning the development or improvement of a product. So what are we getting at here? This is saying, was there uncertainty about the method that was going to be taken for the research activity, the approach that was going to be taken, or was there uncertainties about the outcome of the said research activity? So if the company is passing that test, they have passed part 1 of the 4-part test to be a qualified research activity. The second part of the 4-part test is process of experimentation. This is saying that the research activity must evaluate one or more alternatives to achieve a result that was uncertain at the beginning. So what this is getting at, what this is getting at is, was the research activity process experimental in nature? So did you have multiple alternatives that you were uncertain about that could be the outcome, and you're going to test each alternative, and maybe even as you're going along and testing those alternatives, you're changing your approach based on the results? Or were you using a systematic trial and error as you're testing? So you have one approach you're going to take, and you're trial and erroring ingredients changing. So having some sort of this experimentation in the research activity, with trying to achieve, again, something that's uncertain at the beginning. The third part is technological in nature. So this is maybe a little more straightforward here in saying that the activity must fundamentally rely on the principles of hard science, engineering, or computer science. So hard science, what would fall under there is a wide range of, chemistry, physics, biology, and then engineering and computer science, kind of all catch-alls to saying, is this research activity fundamentally relying on those principles? Last but not least, we have permitted purpose, the 4th test here, which could also sometimes, this one's called the business component test or the new or improved business component test. But what this is getting at here, again, a little more straightforward than the first 2, is that the research activity must be to develop a new or improved, again, here are 6 business components: product, process, software, formula, invention, or technique. So are you trying to achieve a new or improved business component? Few notes on those business components here, very briefly. So a product here could mean tangible or intangible. Process could mean the manufacturing process, the technical process, the science process. Software could mean internal or external use. There are additional rules if you are developing a new or improved internal use software that we are not going to touch base on today. But if that's something that applies to you, definitely reach out to your tax advisor. And then lastly, invention, it means a patentable activity. All right, so let's go over some examples. So qualified research activity examples. This could be, again, developing or engineering a new product, process, formula, or software. This could be even improving or redesigning. Again, you'll see those words: functionality, quality, reliability, or performance. Developing experimental models and prototypes, even creating more efficient, environmentally friendly designs. So if we apply that a little more specifically, so if we take, let's use the food and beverage industry as an example. This could look like improving the formula of a product because you want to extend the shelf life, or improving the packaging to extend the shelf life. So the testing that comes behind there. Development of improved fermentation methods. Again, this is in the food and beverage industry. Developing new or improved food and beverage products to stay current with the consumer trends. So making organic, gluten-free, easy preparation, etc. Experimenting with certain ingredients for low fat or, again, organic ingredients. Seeing how that, one, you can make those new products, but also testing, let's say, the consistency and the quality of the food. So that could be twofold there. Looking at, manufacturing industry, what could this look at in the plastics manufacturing industry? This could be the designing and development of tools, molds, fixtures, jigs. Another activity could be you are trying to optimize the process to reduce waste and recycle waste. Experimenting to identify inefficiencies, again, to reduce, waste, or to reduce production time. That's another example. So those are just a few examples of what this could look like in the real world. Other activities that qualify that we'll kind of describe more once we get into the expense side, the qualified research expenses. Other activities involved that are part of the research activities are the time spent researching and compiling research data, supervising the technical personnel who are engaging in these experiments or these testings, technical design reviews, maintaining research equipment, etc. And then lastly, is if you are paying someone to perform any of these above activities, that is qualified. Again, we'll get into those last pieces that I just talked about as we start talking about the expenses. This list is not all inclusive, just a few examples. All right, so we have talked about who can qualify for the credit, which is as simple as everyone. No business or industry is excluded. We've talked about what activities can qualify. So what research being done, what research activities can qualify for the credit are QRAs, passing that 4-part test. So the last piece to talk about when we talk about qualifying for the credit is expenses. What expenses qualify for the credit? Because if you remember in one of the first slides there, I mentioned that the credit is equal to a percentage of the qualified expenses. So now we need to find out what those expenses are. All right, so QREs, qualified research expenses, you'll hear it used interchangeably. The QREs allowed for the credit kind of fall into 4 buckets. We've got wages, supplies, contract research, and the right to use computers. We will further define what expenses related to each of those 4 buckets qualify for the credit. But first, I just want to quick define qualified research. So in the instructions, it states that the research credit is generally allowed for expenses paid or incurred for qualified research. And as we start to define the allowed wage expenses and allowed supplies, expenses, etc., we're going to keep seeing this word qualified research. So what does qualified research mean? First, it means that the qualified research is passing the 4-part test. It's a QRA. It's a qualified research activity. And the second part that in the definition of qualified research expenses here is that it's a Section 174 expense. So we briefly mentioned 174 earlier, but all that Section 174 really tells us, it defines research and experimental expenses, and it's really helpful. It is, quote, research and experimental expenditures equal research and experimental expenditures which are paid or incurred during the tax year. So it's really just Section 174 expenses are research and experimental expenditures. So going off my little side note tangent there, let's start getting into wages. So our first expense allowed are qualified research expenses for wages. So this is any amount paid or incurred for employees performing the following activities. So any employee that's engaging directly in the qualified research, so again, engaging directly that qualified research in those research activities, any employee directly supervising the qualified research, or any employee directly supporting qualified research. So what does that mean? This means, for example, I've got listed out here. So let's say there's 3 separate employees for each of these activities allowed. So the first one would be the employees directly involved in, let's say, testing a manufacturing prototype. The wages also would be allowed for the employee that's directly supervising this testing of the manufacturing prototype. So who's directly supervising the line. And then lastly, the wages would be allowed for the employee who's directly organizing the test results or gathering the research or gathering those test results and organizing the data of this, let's say, manufactured prototype activity that we were working on. So all 3 of those employees, again, figuratively speaking, it's 3 separate employees in this example, all 3 of their wages would be allowed for the credit. Noting though that this isn't saying 100% of they're performing this one activity, so 100% all of their wages for the tax year are allowed. No, that's not the case. It's for the time that they spent on this activity. So we'll talk about documentation, but this is where time tracking becomes extremely important. And just one more thing, I did miss a point on this slide here, is that for it to qualify, the labor must be performed in the United States. One fun fact here for the wages. So there is a substantially all rule for the wages. So this is saying that if an employee spends 80% or more of their time on qualified research, performing qualified research, you can use 100% of their wage for that tax year towards the credit. So as I was saying in my example earlier, you only are allowed to use the employee's time that is spent on those qualified research activities. And here the code section does allow that if 80% or more of an employee's time is spent on qualified research activities, if that's one activity or multiple activities, you do get to use 100% of their wage. And then, of course, if the ratio is less than 80% for an employee, you use that actual amount of time spent times their total wage for the year. Which brings me to my next slide here, how to gather those amounts. So we are most always recommending that we want box 1 of W-2. So we are asking for the employees that are participating in these activities, performing these activities. We will ask for box 1 of their W-2. And then again, we take that times the percentage of time that they spend. Other ways that are allowed are grabbing payroll registers, time tracking data, which, to note, time tracking data is going to be needed no matter how you're gathering your amounts, because you do need to know how much time each employee is spending. But other ways to gather amount is oral testimony, meeting minutes, time questionnaires, etc. But I will go back, to that first bullet point. Box 1 of W-2 is going to be your best bet there. All right, so the next QRE we have is supplies. So qualified supplies expense that are allowed for the credit include any amount paid or incurred for items used or consumed while conducting qualified research. So the code section 41 does define supply as any tangible property other than land or improvements to land and property subject to depreciation. Excuse me. So what this is getting at here is that if you are, let's say, purchasing machinery or equipment that's going to be solely used for your R&D, and you are capitalizing that, and you spent $100,000 on this machinery or equipment for R&D, that $100,000 does not qualify as a supply expense for the research credit because you are capitalizing it, or it is just property subject to depreciation. So even if you haven't capitalized it for some reason, it's still not allowed. So really that's kind of an open-ended definition, if you will. So any tangible property other than. So some examples include, parts and tools that are used to fabricate, for example, and test prototypes. Raw materials, that's a big one you'll see here. And the example is raw materials used during product or process design. Another example is chemicals and dyes used during testing. So anything that you are using supply-wise during your qualified research. So let's say you are a cheese manufacturer and you are trying to improve your packaging because you want to extend the shelf life of your cheese. So you have the cheese ingredients to make the cheese and then the raw materials for the type of packaging that you use. So the ingredients for the cheese and the raw materials for the packaging that you're using in your testing to extend the shelf life, those expenses count towards the credit. One item, last item on the slide to note here is that an allowed supply QRE must be directly related to the performance of qualified services. So of your employees, the qualified services that the employees are performing, your supplies must be directly related. Really what this is getting at here is that any supplies indirectly related to R&D, so any G&A types of expenditures are not allowed for the credit. Other items that are not allowed as a supply expense for the credit, these are listed out in the code section. They give us these word for word, that travels and meals expense and entertainment expenses related to, let's say, the researchers, telephone expenses of researchers, relocation or rental lease expense, and then professional dues or royalty lease expense related to the researchers, let's say. Those are not allowed as a supply QRE. So directly from the IRS audit technique guide, which I'll really quickly explain what an audit technique guide is in case you haven't heard that before. So the IRS comes up with these technique guides for their auditors. They are IRS auditors that are going to go audit a company's R&D credit, let's say. So the IRS has come up with an audit technique guide telling their auditors exactly what they should be looking at. It defines everything for them. It says, pull this information. If this looks like this, you need to look at this. It is truly an answer key for practitioners and for companies in our situation here, the R&D credit, to know exactly what the IRS wants, what documentation is needed. And if they were to ever come and audit for the R&D credit, we know exactly what they're going to ask. So going back here directly from this R&D audit technique guide, it says, quote, supply QREs in general should represent a small portion of total QREs. And when they don't, when they are substantial, you should be alerted to the possible inclusion of capital or other ineligible expenses being claimed as QREs. So this is telling those auditors that if out of, again, remember we have 4 buckets that QREs fall into. wages, supplies, contract research, and computer use. And if supplies is looking substantial compared to the other four, it's saying alert, alert, go take a look because there might be something in there that's ineligible. It's not saying that there is something in there that's ineligible, but there might be. So key here is supplies really shouldn't be your biggest QRE. We might be including something in there that shouldn't be. We might be including that $100,000 machinery or equipment we bought this year when really that's not allowed as a supply QRE. So gathering amounts for supplies, the biggest one here, first bullet point, general ledger. So creating accounts that are specifically for supply related to R&D is your best bet. It's the best way to stay organized, easy to find. And we know that this is from the audit technique guide. This is what they're going to be looking at. So the general ledger is your best way to gather amounts for the supplies expense that are allowed. Other ways are purchase orders, invoices, receipts, bill of ladings. All right, moving on to our third QRE, contract research. So qualified contract research expense include any amount paid or incurred to any person other than the employee of a taxpayer for the performance of qualified research or qualified services. So if you are outsourcing, you are paying a contractor to do any of your qualified research or qualified services, those amounts you are paying and outsourcing are allowed towards the credit. Two little key caveats here. It is only 65% of the total contract research expenses allowed. So you're paying a contract research, a full amount and what we can use for the credit, we'll take that times 65%. And then the second caveat or note to make here is that it must be performed in the US. So if you are outsourcing something internationally, that is not allowed as a QRE for the credit. So on top of those two, there is a 3-part test. You'll see here throughout all this, there's a lot of 3-4-part tests that we have to pass and we have to be aware of. But the 3-part test that must be met for the contract research expenses to qualify is 1, the contract has to be entered into prior to the performance of the qualified research activities starting by whoever you're outsourcing to. 2, the contract has to provide that research that's being performed is on behalf of the taxpayer. So saying that the taxpayer is maintaining substantial rights to the R&D that's being performed by the outsourced contractor, let's say. 3rd, the contract requires the taxpayer to bear the expense even if the research is not successful. So the taxpayer has to bear the economic risk regardless of the outcome. We would really suggest here that if you are outsourcing, that there is a physical contract in place and these items are stipulated in that contract so that there's no questions whether these items are true. Some common examples of contract research expenses or items that are being outsourced, if you will, is software development. A lot of times, for any of these, think about the taxpayers or these companies might not have the resources to have an in-house software development team and the equipment, so they outsource that work. Same with engineering, prototype fabrication, or another big one, lab testing. And again, remember, it's if you're outsourcing this work for qualified research. So it's not just you're outsourcing lab testing in general, you're outsourcing lab testing for them to further your qualified research activities. Again, the gathering amounts, the best way is the general ledger. So having specific accounts dedicated to these expenses related to R&D in your GL is the best bet. But other ways that will suffice is service contracts, purchase orders, invoices, or if who you're outsourcing to is an independent contractor, so you're sending them a 1099 NEC. Having those all will be other ways you are allowed to gather amounts. All right, the last QRE here to talk about is the rental or lease costs of computers. So qualified rental or lease costs of computers include any amount paid or incurred to another person for the right to use computers while conducting research. And for those expenses to be allowed as a QRE, again, there's a three-part requirement, a three-part test. So the computer has to be owned and operated by someone other than the taxpayer. The computer has to be located off the taxpayer's premises, and the taxpayer cannot be the computer's primary user. So let's talk about examples to kind of better understand what we're getting at here. So if you remember, this credit was originally started in the 80s. So how this QRE started was, in the 80s, this QRE is very big in the computer software development realm of research and development. But companies were leasing data storage facilities, literal physical data storage facilities to house for the R&D work that they were being done. And those lease expenses were allowed for the credit. What this has really turned into today is cloud computing services. So cloud computing services, we'll kind of get into some details on the next slide, but what happens here is we have cloud service providers that have space that's leasable in the cloud. So companies, the taxpayer is leasing out, leasing cloud storage with another third-party company. And that's how this QRE is really starting to be seen now in this day and age of technology. So there was some, as the cloud started to get bigger and we started to use the cloud more, there was question of if this cloud computing rental service meets the requirements that we stated on the previous slide to be a QRE. And the answer is yes, for the following three reasons. One, the business claiming the R&D credit is not the primary user of the cloud infrastructure. Remember, they're getting it from a large third-party vendor, if you will. The servers for the rental service are in various locations. It's not on the taxpayer's premises. And the cloud servers are owned by other companies, such as major service providers, AWS, Azure, Rackspace. So for those reasons, that's passing that three-part test. So cloud computing services, the rental leasing expense is allowed for the credit. An example here, again, big in the computer software development world. So this would be if software developers are using a cloud environment to not only perform their development work, their research activities, but perhaps they're also designing a mirrored virtual environment for their new tests that they've newly developed to confirm that it doesn't disrupt the functionality of an existing program. So that's one example where a company might be using cloud computing services. All right, so those are our 4 QREs. And as you can kind of see as we were talking through those, it's alluding to a lot of documentation is required between the QRAs, the research activities happening, and then the expenses that we're allowed to use for the credit. So what does this look like? The IRS guidance, quote, they say a taxpayer must retain records in sufficiently usable forms and detail to substantiate that the expenditures claimed are eligible for the credit. So what they're getting at here is they want proof of product qualification, and 2, they want these expenses that are eligible for the credit by project. So, as you work with your tax advisor, your R&D consultant, you really want to make sure you've got this proper documentation and you have proof that the projects that you're doing, the business components that you are improving or designing, is you have each one separately listed and how they pass the 4-part test, and then expenses by the project. The IRS audit technique guide does mention if estimations are needed, how that would look. Going a little farther on the documentation. So again, the audit technique guide, I've taken this straight from there. This is exactly what the IRS auditor is going to ask for. So that means this is exactly the documentation that we have to have. So one, for the activities, again, like I just mentioned, they're going to ask what each activity is what each activity is and why that activity is eligible. So how does it pass the 4-part test? For wages, for your wage expense, they're going to ask for the names of the employees, the amount of their wage amount, the percentage of annual wages that the percentage of their annual wages of them doing qualified research activities, the departments they're in, their job title, and their description. Supplies, they're going to ask for the categories of supplies. They're going to ask how that ties to the general ledger. So again, that's where we kind of said the best way to track supplies is by making an account so that you can very specifically grab that from the general ledger and say, these are my supplies for R&D. But they're also going to ask the supplies amount by the category. So they're going to ask for the supplies expense again by project, by activity. For contracts, they're going to ask who the contract is with, the amounts, and the categories again, so by project. Other items that they might or that they will ask for, are the taxpayer's base amount and the fixed base percentage calculation. So we'll get to that here when we talk about calculating the credit, but that is really what we're getting at here is they're going to ask for your calculation. So however you calculated the credit, they're going to want that calculation. Key here, work with your tax advisor, your R&D consultant, and make sure you have all the proper documentation. So if this is what's going to be asked for under audit, that means this is what needs to be readily available at all times in the documentation that's needed. Other documentation that the auditor may ask for or that could just be helpful to have on hand so that you can very easily identify your qualified research. They might ask for any materials explaining the research activities. So if you have brochures or pamphlets or press releases, keeping that information could be helpful. If you are submitting any information to management, board of directors, either, you're submitting R&D budgets or R&D project ideas or anything of that sort, keeping that information on hand is very helpful. Along that same breath would be, the meetings from a board meeting, let's say, the minutes from a board meeting, let's say, where you're talking about the R&D activities that are being done, or you're talking about the budget being done. Having all of that information on hand could be extremely helpful. All right, so let's now talk about how to calculate the credit. We'll talk about federal and Wisconsin. So for federal, there are 2 methods of calculation, of ways you can calculate the credit, and you can alternate between them on a year-by-year basis. If you pick one, you can only use that one going forward. Let's say that is not the case. So we have the regular credit and we have the alternative simplified credit. So the regular credit is going to be the higher percentage. You could get up to, you can get 20% of the credit is 20%, but there's more documentation required and the calculation is a little more complicated, complex, if you will. And then the alternative simplified credit is 14%. There's a little less documentation required and the calculation is a little easier. But you can alternate between year to year. Like I said, we'll run through an example to show how something would calculate out using the regular credit, how something would calculate out using the alternative simplified credit. And really best practice is to calculate both every year, see which yields the highest credit, and that's the one you'll use that year. But we'll get into that more. I'm getting ahead of myself here. So the regular credit equals 20% of the smaller of the current year QRE's expenses that exceed a base amount, or 20% of 50% of the current year QREs. What does base amount mean? Base amount is determined by applying a fixed base percentage to the average gross receipts for the 4 most recent years. So that means what we're saying here, back to the bullet point up top, it would be the current year QREs that exceed a base amount, which equals a fixed base percentage times the average gross receipts over the past 4 years. What's the fixed base percentage? That's a tongue twister there. The fixed base percentage, I took a snippet here from another presentation at the time because it really lays it out well, but it is complex. This is where I was talking about the complexities that come in, and this is what comes in with needing more documentation. So in your first 5 years, you use 3% is your fixed base percentage. But then you can see for the next 5 years, there is a convoluted calculation. And then every year after that, you can use the percentage between that was calculated between 5 years between the 5th and the 10th year. So those 5 through 10 years. Okay, too many words. We're going to go through an example here, but really what this fixed base percentage is getting at, again, is in your first 5 years, you use 3%, and then there is a different calculation for your next 5 years. So what that would look like in your 6th year, if you look at that second line there, in your 6th year, you would take your 4th and 5th year aggregate QREs divided by your 4th and 5th year aggregate gross receipts times 1/6, and that's the percentage you use. That percentage, though, can never exceed 16%. Again, as you can see here, the regular credit is a little more complex and it requires more documentation. You need all the documentation from your first year. Noting here, what does first year mean? This could either mean it could be your first year of business, but it's the first year that you have both gross receipts and QREs. So if you are a company that's been doing R&D since the day you open your doors, your first year is that first year of business. If you are a company that's been around for a long time, but you just started doing qualified research and having qualified research expenses, that's your first year. All right, so let's get into an example here. So this is going to be one where it's a company that's in its 10th year of business, but it's in its 4th year of the business conducting qualified research. So it's in its 4th year in terms of our fixed base percentage. So that means we're keeping it easy here. We're just going to use 3%. Other items to note in this example for QREs, for wages, we have 100,000 and our supply QREs are 30,000. And the 4-year average annual gross receipts is 250,000. So let's take a look at what this looks like. Now, again, this is the Form 6765, Credit for Increasing Research Activities. This is the old form. We will talk about the draft new form. So this is the form that would have been filed on all 2023 tax returns, just for simplicity's sake here. But if we take a look, we start off here just listing out our QREs. So we have the 100,000 of wages. We've got the 30,000 of supplies. On line 9 to give us our total QREs for the current year is 130,000. Line 10 is that fixed base percentage. We're in our 4th year, so that's 3% because we're within our first 5 years. Next up here, line 11, we've got 250,000 as our 4-year average annual gross receipts. Those are kind of the easy slot-ins, if you will. Next, we get to line 7. So line 7 is our base amount. So again, the base amount is your fixed base percentage times your average gross receipts. So that is 7,500. Line 13, that is our excess current year QREs, 130,000, remember, over the base amount. So 130,000 less that base amount of 7,500 gives us 122,500. That is, again, the excess current year QREs over base amount. Because remember, the credit is the smaller of the current year QREs that exceed the base amount or 50% of the QREs, the current year QREs. And so that's what we see here on line 14. It just says take your current year QREs 130 times 50%, which is 65,000. So what we are allowed for the credit is 20% of the lesser of line 13 and 14. So the lesser is the 65,000. We get to take that times 20%. That equals 13,000. So if we use the regular credit method, our credit for this year is 13,000. Okay, so let's jump into the alternative simplified credit, and then we'll run through that same example to see what it looks like. But first, let's define how this method credit is calculated using this method. So this is 14% of the current year QREs above 50% of the average QREs in the previous 3 years. Always a lot of words and always hard to see unless we get into an example. So we'll get to that shortly. Just really quickly noting here, if you're in your first 3 years and you are using the ASC method, you just take your current year QREs times 6%, and that's the amount. But let's jump to an example here. So same example as before, 10th year of business, 4th year of the business conducting qualified research, wage QREs equal 100,000, supply QREs equal 30,000. Now for this example, we need our 3 prior year total QREs summed together. That equals 330,000. We don't need our fixed base percentage using this method, and we don't need the average annual gross receipts using this method. So how would that look? So now again, this is the form 6765. This is section B, is where you calculate the alternative simplified credit. So taking a look at this again here, line 24, 25, we're just listing out our QREs for the year to give us our total current year QREs of 130,000. Line 29 is our the sum of our prior 3-year QREs. So we have that as 330. That was on the fact pattern. Line 30 is you are going to divide line 29, the 330,000, by 6. This is the base amount in this method. So that 55,000 is 50% of the 3-year QRE average. So the 330,000 is the sum of our prior 3-year QREs. Divide that amount by 6%. So that's 50% of the average. That's 55,000. That's our base amount in this method. Line 31, that is our excess current year QREs of 130,000 over our base amount of 55,000. That equals 75,000. Because again, remember the calc is 14% of the current year QREs that are in excess of above the 50% of the average QREs in the previous 3 years. So of the 55,000, the excess of our current year over that. So 130,000 our current year QREs less the 55,000 equals 75,000. We get 14% of that. 14% of 75,000 is 10,500. That is the credit amount allowed using the alternative simplified method. So kind of summing that all up in our example, if you use the regular credit method, we saw we got 13,000. Using the alternative method, we got 10,500. So obviously we want to use the regular credit. Key here again, calculate both every year. There can be years depending on how things are lining up and depending on how your fixed base percentage is calculating. There could be years where the alternative simplified credit will still yield a larger credit for you. And so you would want to use that. So calculate both every year. I do want to note we do have situations where a company might not have substantial records to go all the way back for gross receipts and QREs to use the regular method and to calculate their fixed base percentages. So for that reason, we use the alternative simplified credit every year. So, if a company has been in business for 20 years, they've been doing research and development, but didn't know they could be taking the credit until this year. To be able to use the regular credit, they'd have to go back all 20 years to figure out their fixed base percentage. So sometimes that's just not realistic, and we use the alternative method instead. All right, just checking that what I'm doing on time here. 10 minutes. All right, I think I can do this. So really quickly here, Wisconsin does have an R&D credit as well. It is similar to the federal calculation, but 2 main differences. One, the credit is just equal to 5.75%. There's no different methods. It is just 5.75%. Second key main difference here, that the QREs that you are allowed to use for the Wisconsin R&D credit, the expenditures must have been incurred or performed in Wisconsin. So if you have contract research, let's say, and you are a Wisconsin based company, you are looking to do the Wisconsin credit, but you have contracted something out to Florida, let's say, those expenses are allowed for federal, but they are not allowed for the Wisconsin credit. So you, again, key in the documentation process is documenting each contract by each project and who that contractor is, so we know where they're based. And the credit for Wisconsin is reported on Wisconsin Schedule R, Wisconsin Research Credits. Awesome. All right. So let's talk about reporting requirements, where I was going to go into something a little different, but now let's just talk about our new proposed form 6765. So in September of 2023, the IRS proposed a new form 6765, and they opened it up for questions, comments, and concerns. And they got questions, comments, and concerns. And so in June of 2024, just this summer, the IRS announced a new revised draft, taking into consideration the questions and concerns that they received from their originally proposed form. And they announced this via IR 2024-171, in case you want to go look that up. So now, as of June 2024, we have a revised draft form 6765, which had a few changes from the original one they proposed. So their proposed changes altogether. So page 1, section A and B are going to stay relatively the same. So in our example, that's where we just looked at section A and section B. Again, section A was the regular credit. Section B was the alternate simplified credit. Those stay relatively the same. The biggest difference there is that instead of listing out each QRE category, so the wages and the supplies, there's just a total QRE section that comes from the new section F, which we'll see on the next slide. So that's the biggest difference on page 1. Where the differences really come in is every page after that. They have section E, F, and G that are all new sections on the revised draft. So we will jump into those. Just noting here, though, instructions have not been released. So we're working with the IRS release 2024-171 and the draft form, but we don't have instructions yet. We'll know much more once things are more finalized and we start to see instructions. All right, so let's look at these new sections. So section E, this is going to ask us for some new information. It's information that we should always have, that we've been documenting in the past, but the IRS has never asked for it and asked for us to tell them on the tax form. So they're asking for the number of business components generating the QREs. So they're asking for every activity, every business component, and how many you have. So again, this is documentation we've always needed, but now we're going to be putting it on the form. They also ask now the amount of officers' wages that are going to be included in your QRE wage expense. And they ask a few other questions here that will definitely help us more too once we have instructions. We also have section F, which is new. So section F is new, but what section F is asking isn't technically new. It's very similar. So this is where I mentioned before on the old 6765, the QREs were asked for in each section A and section B. Now they're just going to be asked for here in section F. Your total wages, your total supplies, your total rental or lease cost of computers, etc. And you take that line 48, that sum, and you just take that sum number to the credit calculation. So section F isn't all that new. We've already been filling out. It's just in a new format. Really, the key takeaway here is that your tax advisor, your R&D consultant might be asking you for some additional information going forward to be able to fill out these new forms. The biggest change and the biggest talk of the town, if you will, is section G. the business components information. So the IRS is asking for each business component and to list that out on the form. Again, this is information we should always have already been documenting, but the fact that they're asking for it now is new, and it's big, and it's a big compliance additional workload. So this is where they kind of got the backlash in the originally proposed form. And so they made some updates in June of 24. So two updates they made. One, they made Section G optional reporting for certain qualified small businesses. The two types of qualified small businesses that will have optional reporting of Section G, one includes the qualified small business who checked the box to claim a reduced payroll credit. Now, we haven't talked about the payroll credit that's on this form. Not enough time in this webinar, but if you check the box to claim a reduced payroll credit, you're a qualified small business, Section G is optional. The second group that Section G is optional for are taxpayers with total QREs equal or less than 1.5 million and total gross receipts equal or less than 50 million. So if you kind of fall into that small business taxpayer, Section G will be optional. And then for everybody, Section G is optional in 2024 and tax year 2024. So filing 2024. So that means processing year 2025 and will be effective in tax year reporting year 2025. So processing year 2026. They also, in the release in June, lowered the amount of business components that those that do have to fill out Section G have to report. So work with your tax advisor, your R&D consultant, and make sure you have the proper documentation to be able to fill out this form if needed. But even if it is optional, you fall into the small business taxpayer thresholds that they have set out, you still have to have this information documented. You just won't need it to put it on the form. All right. Okay. Really quickly here, running up to time, I know. I just want to really quickly talk about Section 174 and where that's currently standing. So for a quick brief background on Section 174, pre-TCJA, Code Section 174 discussed the allowance of those research and experimental expenditures that are allowed to be deducted. The intent of creating Section 174 was to eliminate any uncertainty businesses had, and so that businesses were confident that yes, we can perform R&D and we can deduct our expenses. Post TCJA, as we all know, now Code Section 174 discusses that no deduction is allowed in the current year for such expenditures. Instead, they must be capitalized and amortized over 5 years or 15 years for foreign research. So why is this always brought up with the R&D credit? And the reason for that is if you have the R&D credit, you have a Section 174 issue. Remember, we were talking about qualified research earlier, and we said for it to qualify as qualified research, the expenses are 174 expenses. But the other key point here is that if you don't have the R&D credit, you might still have a Section 174 issue. I'm a very visual person, so the Section 174 expenditures are a very large bucket, and the Section 41, which is the credit, is a part of that, but it's not all inclusive. There are other expenses out there that fall into Section 174, so you might still have a 174 issue. Last slide here, where does that leave businesses? Where does that leave us standing? There was a bipartisan tax bill that did pass the House. It was stalled in the Senate. It restored immediate deduction. And we kept saying nothing's going to happen before the election. The bills aren't going to be passed. Well, we've come to the election, and where does that leave us now? It's really we're going to start to hear things once that new administration takes effect in January and they start to talk about their new 2025, hopefully, tax reform efforts. And so that's when we'll start to hear talks of where does this leave 174? Hopefully it's retroactive, But even if it is 2025 tax reform, we probably won't see it until processing year 2026. So we're still kind of in a standstill there. Okay, very sorry I went 1 minute over here. I appreciate everybody's time. I have my email address on here. If you have any questions at all, please reach out and I will try to get back to you as timely as possible.
Thank you so much, Sarah, for that insightful presentation, and thank you to everyone for joining us today. We hope you found the session valuable and gained some practical takeaways. As a quick reminder, a recording of today's webinar will be shared with you via email so you can revisit it, or please feel free to share it with others who may benefit from this information. If you enjoyed today's session, be sure to check out our website for other upcoming events. Next month, Sarah is presenting again for us another webinar that might interest you on year-end tax updates, so be sure to check that one out. If you have any follow-up questions, as Sarah mentioned, please feel free to reach out. She'd be happy to connect with you and provide further insights. Thanks again for your time, and we look forward to seeing you at future webinars. Have a great rest of your day.
Thank you.